So I'm looking at mags now, and I'm looking at trading that. I'm kind of segueing from maybe trading Ives. For whatever reason, we sold off today. Sorry for the wind, guys. I'm outside. We sold off today, and Ives was dumping too, but the puts weren't going for higher. It was really strange. So for that reason, I decided to move to something a bit more liquid, and mags is very liquid, and I've made money on the pass on that exponentially. So I want to trade it again, but I've been waiting for this kind of pullback. And right now we're hitting 61.73. No big deal really. We're not even breaking below the 200-day yet. So I marked out some areas where I'd be interested in buying the dip. And the first big pickup area I see is at the previous top before the April lows where we sold off. And that's around 56.54 currently. And then there's a gap down there around 49.71. There's a gap there. And if you run a Fibonacci on that, that's the golden pocket too. So that would be a great setup, a great buy zone. A good risk to reward in my opinion. And we could actually bounce here potentially, but if you look at the Mag 7, they don't look too strong on the charts. So we could actually go lower. And we're oversold on the RSI for the daily chart. Let's take a peek at the weekly chart on here. Weekly chart, we got a ways to go yet. And if we're going to coincide that April, a pre-April sell-off right there, that's my buy zone, beginning buy zone. I'm not too aggressive at 55, but I begin at 55. I might even consider selling puts already, but with a 55, 56 strike currently. But my bigger zone is at the golden pocket area around $49, right where that gap is. I don't know if we'll hit that, but if we did, I'd be a buyer, but I'd be long term. And what I'm thinking of doing, really honestly, is looking at the options table on it and going out with a leap, maybe even instead of buying shares. And I think really up to a year almost, not quite a year, switches to Coles. Probably at a 60 strike, get a little bit in the money. But I want to look for a lot of open interest, and I'm not really seeing it. So I got to find a contract that has a few hundred, upwards of maybe even 1,000 in open interest. And right now, I'm not really seeing that. So that 55 strike's got 466 in open interest. You see that? So I'd probably go with the 55 strike. But I wouldn't do that unless we hit the golden pocket. So whatever that's going to cost me at that point in time, if we hit that golden pocket. Prior to that, I'm looking to actually take on shares by maybe selling cash secured puts at the 56 strike. So we're going out really far on the expiration. Let's try 20 March, a little over 30 days, and look at the 56 strike. So looking at that, open interest at 113 or 2 in volume for the day. The bid is at 0.50, basically $50, and the ask is at 85. The last fill was at 50, so yeah, that's not too bad. A little over a month out, $50. It's okay, but it's nothing to write home about. So I'm not real enthusiastic about selling a put on this just yet. I don't mind taking an assignment on mags. I would just average down on it. I did that once before, and I was trading a lot in April, and I made quite a bit of money on it. Did really well with it. So it's fairly liquid. It gets decent volume, and the options are not the most liquid in the world, but they're not bad either. But you can see that like that 60 strike is going for $160 currently, but that's too close to at the money for me. I feel like we need more downside for the risk to reward to be a better payoff. At 56 is my beginning, and my big target area is if the share price ever gets closer to 49. But I won't be selling puts at that point. Instead, I'll either buy shares outright, or I'll go ahead and buy coal leap options on mags. And mags is the Mag 7, the ETF basically. I know I got Netflix in the Mag 7, but that's only because I've been buying shares lately. So I like to track it along with the rest of them. I even got YMAG in there, but don't pay attention to that. I quit trading YMAG. The nav erosion is too painful to watch, man. To be honest, since we end up in a bear market for too long, YMAG's going to get wrecked. So Mags isn't a dividend payer. It's just straight up based on the price action of the Mag 7 stocks. And that's why I like trading it. All right, guys, take care out there. Be careful.